Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, the stocks to watch out for, and of course, the fact that Chennai Super King has clinched its 5th IPL title led by MS Dhoni. Well, all that and more. And of course, if you have any stock-related queries, send them in to us on a live feed and we'll have them addressed by your technical expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Asian markets trade mixed ahead of the US vote on raising the debt ceiling. Remember, Wall Street was shut last night on account of Memorial Day. The SGX Nifty, meanwhile, is indicating a start above that 18,700 mark. Apollo Hospitals likely to report margin contraction in the fourth quarter on higher spends on omni-channel play Apollo Healthco. Adani Ports too will report fourth quarter numbers today. Also, stocks in focus will be Adani Transmission, IRCTC and RVNL. And Chennai Super Kings defeat Gujarat Titans by 5 wickets to clinch their 5th IPL title. A visibly emotional Mahendra Singh Dhoni soothes fears over his retirement, says he wants to play another season as a gift to his fans after all the support that he has received this season. Well, let me get on board then. Our guest for today, Mr. Ajay Bagga, Chairman of Elyments Platforms, is joining in this morning to discuss the market setup, to discuss the sectors that one should be watching out for, and of course, if he has any favorites at this juncture. Good morning, Ajay. Good to have you on the show. You know, first of all, before I start my other questions, do you think it's time to officially bury the old saying that, you know, sell in May and go away, given the fact that we are just about 1.5% away from all-time highs?
I think we have made hay in May, so I think the old adage should change to make hay in May. So this time has been very different, Nandita, as it has surprised a lot of market players, and various things have been behind it. We'll discuss that further, but yeah, we have made hay in May and won't complain about that.
Right. Ajay, you know, globally risk on is back, given the fact that, you know, the US lawmakers have in principally agreed on a debt ceiling deal. But after, all this news flow about debt ceiling is out of the way, the focus will once again shift to the Fed. And given the kind of economic data coming out of US, it's pretty much evident that the US economy is showing a lot of strength even now. And the jobs market is still hot. So, the Fed, the CME Fed Watch tool is indicating at another 25 basis point rate hike, and the chances of that happening is in excess of 60% now. It was earlier around 17 to 18% or thereabouts, but now there is case building for another 25 basis point Fed hike after, before it hits the long pause button. What are your own thoughts on that?
Yeah, I think it's a very high probability now, as you mentioned. And if you look at July and September, so even if June they decide to pause, July rate hike is more or less a given then. So we are looking at 5.25 by July end at any go. But I think given that a majority of the voting members feel that earlier is better, I think they'll go ahead with the June rate hike. The reasons are a very strong US consumer. The retail sales came out very well. The preferred indicator of the Fed, the PCE, showed a sharp rise month on month. So that was worrisome. Despite energy costs staying subdued, still the services costs, because of the reopening trade, those are staying elevated. And the Fed is quite distant from its self-imposed target of 2% at roughly just sub 5%. So I think June rate hike is very much on the anvil, Nandita. The big difference over the last 1 month is December futures were earlier showing a very high probability of 3 rate cuts by December. Now that has moved almost flat. So it's somewhere in the range of 4.75 to 5.25, which means that maybe 1 rate cut by December if the economy doesn't do well. But the threat of a slowdown in the US right now is not there. The GDP now number of Atlanta Fed is coming in at 1.9. It has fallen from 2.9 in April to 1.9 in the last reading. That's a nowcast. So it goes with all the data that is reported on a daily basis. Normally, you can say a plus minus 1%, but definitely it's not a negative print for GDP for the US for this month. I think all that, and then the CPI number for June for May will be out before the Fed meets, so they will have that input as well. I think a very high chance that they will raise rates on June 14th.
Right, high chances of another rate hike coming in by Fed. But, let me also talk about sectors now. Nifty Bank hit a fresh record. You had Nifty Auto, FMCG, all of these indices hitting fresh highs. In fact, the mid-cap index was also at a fresh high, some time back. So all these sectors participating in the rally, which according to you would take leadership now that the fourth quarter earnings are also out of the way. Any favorites for you?
I think infrastructure tends to do very well in the year before the elections because governments really pull up their performance and try to spend on public works to make it very evident to the public that how well they have performed. So across the economy, from local governments to state governments to the central government, you can expect a lot of focus on ease of living, on infrastructure. So that tends to do well. Banks, yesterday, if you saw the speech of the RBI governor to the bank board directors, he mentioned that 16.1 CAR for banks, very well capitalized banks, very strongly falling gross NPS. And third, that they have the third part being that the credit growth has been strong. The provision coverage ratios have gone up. So banks and financials will benefit from India's growth. They remain very strong bets even for foreign portfolio investors. Contrarian bet would be IT. IT, the profits have fallen quite a bit and the outlook has dimmed. That's a good time to start nibbling at IT. Maybe over the next couple of quarters, if there is a slowdown in the US, you will see a sharp correction in IT. That might be a good time to get back into IT. Right now, it's become under-owned. Nobody's really going there. But I think IT has a lot of runway. And with all the artificial intelligence re-rating that's happening, it's a matter of time. Yesterday, Odisha government, for example, along with Intel, launched an artificial intelligence for Odisha initiative. If governments are waking up to this, you will see a lot of it coming to our IT companies also.
Right, dips are a good time to accumulate and get into IT, and in this space is quite under-owned, especially after the disappointing show we saw in the fourth quarter. But before I let you go, Ajay, any chances of Nifty hitting that 20,000 mark anytime soon?
I think we have a good momentum for it. What we have to watch out, Nandita, what you started the program with, the fundamentals we have to look back at. The debt ceiling raised some amount of risk, but it was an artificial ceiling. We knew mostly they will go through, and now hopefully the US, House and Senate passes it, by Friday. Tomorrow is the voting in the House, most probably, and the Senate should vote by Friday. Hopefully it goes through. But the fundamentals we have to look at when the Fed is tightening, the Fed is doing QT, plus your fiscal is getting capped by the debt ceiling. So both fiscal and monetary wise, there is going to be a paucity of liquidity. Second is the China slowdown. You see the Chinese market, Hong Kong market, yesterday's performance, today's performance, and then linked to China, all the suppliers into China and the people who take goods from China, both will see a slowdown if China slows down. So the Chinese property market, the Chinese leverage at the local body levels, the industrial degrowth, industrial profits falling, I think all that needs a stimulus now from the People's Bank of China. That will be very critical, and that will be very critical for the entire commodity complex also. So those two fundamentals we have to watch: a tightening Fed and a Chinese slowdown. beware of that. India is in a very sweet spot, but we are coupled with these two moves. And in case, the Fed over tightens, the dollar goes up further. It went down all the way to 100, the DXY 104 plus now might rise even further. So those are the cautionary things we have to watch out. I'll be very happy if we hit 20,000 soon, but it will take a lot of doing. It's not that simple.
Right. We can look at 20,000 mark soon, but it's not that simple. That's the word from Ajay. Ajay, always a pleasure speaking to you. Thanks a lot for taking out time and joining in this morning. Well, with that, let's shift focus to technicals then. And joining in today, this morning, is Sacchitanand Uttekar of Tradebulls Securities. Good morning, Sacchitanand. Good to have you on the show. Well, 18,700 on the index today, given the fact that SGX Nifty is trading above that level.
Good morning, Nandita. Nandita, I think from a trend perspective, there is no second thought that the market has been trending very well above that 18,500. The breakout on a weekly closing basis has been, substantial. And if you look at the daily structure, the level that we are tracking on the upside is placed somewhere close to around 18,730. So probably we may see this particular momentum getting extended towards that. The only caveat here is that if you look at the RSI and if you start comparing the recent swing highs from 7th of May, there's a clear-cut RSI and price divergence which has been exhibited on the daily scale, but there is no confirmation yet on a reversal side. If you look at on the entire data which shaped up yesterday, 18,500, 18,600, the put writing was very confident. So probably we may see the Nifty elevating its base confidently, and right now I think 18,500 is a significant level to watch out on the lower side. Until unless we are holding well above this particular level, the probability of Nifty scaling towards 18,730 remains high. So definitely, one should continue to hold on to their long positions. In case of any declines, the stop loss should be placed at around 18,520 on a closing basis, and long position should be added for a final target of around 18,730.
Right, so that's the view on the Nifty. Let's talk about the stock of the day. IRCTC reported a good 30% jump in profits. In fact, revenue also went up somewhere around 40% or thereabouts, but margins have come in under pressure, coming in somewhere around 33% vis-a-vis a 40% on a YY basis. Now, if you talk about RVNL, even that reported numbers, but profits were down 5% and revenue was also down 11%. Margins, however, were a little higher, tad higher rather, compared to last year. Sacchitanand, what about these railway shares? Over the last 1 month, we've seen a good uptrend, but on a 6-month basis, all these stocks have not really done all that well. So, do you think this fourth quarter performance will give some bit of a fillip to the stock prices going forward?
Yes, Nandita. In fact, we have been chasing longs here. We have been recommending longs in this particular pocket, especially the kind of move that unfolded yesterday ahead of the results. It showed a very confident price action with a closure above its 200 days exponential moving average. If you look at the weekly setup as well, there's a very confident positive crossover on its 5 and 20 weekly exponential moving average, with an RSI jumping above that 50-55 mark. So I think the entire setup looks promising. The kind of consolidation that we have seen in the last 3 months, I think probably that particular consolidation has already been matured, and we have already seen a good strong breakout from an inverse head and shoulder formation on its 60 minutes chart. The price pattern itself is indicating a move towards 710, 720 kind of a zone. So probably this particular stock should be there in your trading portfolio. The stop loss can be placed somewhere close to around 635 on a closing basis, and we still warrant building long positions here for an eventual target of around 730.
Right, that's the view on railway stocks. Then let's also talk about Balkrishna Industries. Now, this stock was down somewhere around 8% in yesterday's session. Fourth quarter profits had declined 30%. Earnings weren't really all that enthusing. And this morning we have Nomura, which has come out with a reduced rating on the stock with a target price of 2100 or thereabouts. It has revised volume growth to 4 to 8% from 5% earlier, and it also expects FY24, FY25 EBITDA margin has been revised by 100 basis points going forward. Near-term headwinds remain, and the growth is expected to remain subdued. That's what Nomura says on Balkrishna Industries. Of course, we saw the reaction play out in yesterday's session, but do you think it's time to actually accumulate this counter on dips?
Nandita, I think 2200 support looks confident. Even yesterday, we saw it swinging towards its 20-day exponential moving average, which is placed at around 2245. It did not, close below that particular average, and there was a strong pullback, which ended almost around 2275. So probably, the kind of reaction that we have seen so far, we may see some, final legs there, but we don't. The support at 2200 looks confident. So probably after some consolidation, once we get evidence of an up move resuming, that could be a closure about 2300. So probably that will be a good time wherein the stock can be accumulated in the portfolio. Even from a trading perspective, right now it's better to take a level based trade. So in case if we see a confident breakout about 2300, then probably keeping a stop loss somewhere close to 2240 could be a good idea. We may see it again rebounding towards that 2500, 2600 kind of zone. So as of now, the structure is good. The momentum had been very strong. The recent correction could be another opportunity to, again, create some long positions in this particular counter.
Right. Recent positions, in fact, can be built in on dips when it comes to this stock. Let's take up some queries then. Vasudevan has written in and wants to know your thoughts on the banking stocks like Axis Bank, Federal Bank and SBI. Any short-term targets on these stocks now, Sacchitanand, that you would like to share with our viewers?
Well, when it comes to SBI, we are tracking, the level of around 610. The consolidation so far has been healthy. We have already seen a very smart pullback towards that 570 kind of a zone. The recent consolidation again looks mature. We don't have any signs of overbought state when it comes to SBI. So probably the reward to risk is also quite decent to build in some long positions there. So this particular space can be recommended. Keeping a stop loss somewhere close to around 574 on a closing basis. A probable swing towards 610, 620 can be chased.
Right, that's the view on some of these banking stocks. Hope this answers your query. Let's also talk about some of these Adani Group stocks because they are reporting their numbers. Yesterday, Adani Transmission saw a 70% jump in profits on a YY basis. I think today Adani Ports is reporting its earnings, if I'm not mistaken. And we have a query coming in on Adani Wilmar as well from Marcus. How would you trade some of these counters now, Sacchitanand?
Wilmar, the price action has been skewed. It's better to, take a trade once the stock starts trending above that 500 mark, where its 200-day exponential moving average is placed. As of now, if you look at the weekly structure, we have already seen a good, strong low top, low bottom sequence getting converted into a sideways consolidation. So probably, there needs to be a change, confirmation of change. Which can be established when the stock starts trending above 500 zone. So probably on a breakout about 500 would be a good idea. The stop loss can be placed after that somewhere close to around 410 on a closing basis.
Right, that's about Adani Wilmar. What about Adani Ports? Sacchitanand, MS has written in and wants to know your thoughts on this one as well. And the company, of course, reports its earnings today.
We are expecting a move towards 820, 825. And if you look at the consolidation here, for the last 5 trading sessions, it has been respecting its 200-day exponential moving average well. So probably, any declines towards 720 can be a good opportunity to, build in some long positions here. The support base at 700 as of now looks strong. If you look at the ADX on the daily scale, it has been comfortably trending above that 25 mark. So I think the setup on the price front also looks promising for a move towards 820. So yes, a stop loss can be placed at around 720 and some long positions can be chased here.
We're getting some queries on, some of these exchanges like MCX and of course CDSL as well. Tejas Jain wants to know your thoughts on these two counters, but both these counters haven't really done much on a 1 month basis. How would you advise investors to play these two stocks now, MCX and CDSL?
Well, CDSL, even right now, the trend doesn't look that confident. We are seeing the weekly structure, which has been displaying a low top, low bottom sequence. There are no signs of fresh impulse here. Recently, we have seen a good, healthy consolidation near that 900, 980 kind of a zone. So probably, once the stock starts trending above that 1,000 mark, we may see one more relief rally towards 1160, 1100, 1080 kind of a level. But as of now, the trend remains weak. But when it comes to MCX, there is strong evidence of a fresh impulse getting built in. We saw a very strong reversal from the 1300 base. And if you look at the daily charts or the 60-minute charts, there is an inverse head and shoulder which has been activated. So probably MCX, can be traded here, keeping a stop loss somewhere close to around 1360 on the lower side. Some long positions can be built in here for a target of around 1500, 1520.
Right, another query coming in on Gravita India from Debu K, and there has been some news flow around this counter given the fact that promoters have sold stake worth 180 crores or thereabouts, and over the last 1 month I think the stock has done extremely well, up somewhere around 13% or thereabouts, inching towards its 52-week highs. How should one play this one now?
Definitely, I would avoid chasing momentum here. There have been instances wherein the stock has failed to sustain above that 600 mark. Any slippages below 560 could be lethal for this particular counter. If you look at the weekly charts, there is a divergence which has been displayed, and probably the confirmation of that particular divergence will set in once the stock starts trending below 560. So definitely, in case if someone is holding on to this particular counter, the trailing stop loss should be placed at 560 on a closing basis, and in case if that particular level is breached, would strictly avoid building any long positions for a couple of weeks.
Right, that's the call on Gravita. Avoid chasing momentum here. That's the call from Sacchitanand. Let me take up a query on Varun Beverages. This one is coming in from Yagnesh, and he wants to know your short-term and long-term view on this stock. Now, Varun Beverages had become the 4th largest FMCG company by market capitalization, but briefly so. But this counter has, been on a lot of buy lists. On a 5-day basis, it's gained somewhere around 10% or thereabouts. Should one chase this momentum?
See, the structure is very healthy, but it always gives you an opportunity. Even after a strong run up, it displays or shows signs of consolidation, and probably that will be a good time wherein some long positions can be considered. Chasing momentum would not be warranted here. The stock has been displaying a higher top, higher bottom sequence. We have been seeing multiple flag pattern formations here on the daily scale, but as of now I think we may see some consolidation within this particular band of around 1630 on the lower side and 1730 on the higher side. So post this consolidation again, we may see this up move getting resumed. So I would rather wait for this particular consolidation to again mature, and maybe place stop losses somewhere close to around 1580 on a closing basis, and then chase long positions. But when it comes to the longer term charts, I think it is in a very strong secular bull run. There are no signs of exhaustion even on its monthly scale. So I think this particular trend may continue. From a pattern perspective, we don't have any evidence to extrapolate the further targets. But definitely, when it comes to the trend structure, the trend should remain healthy until unless the stock continues to trend above 1530 mark.
Right, the trend is looking on the up when it comes to Varun Beverages. I think we just have time for about one last query. This one is coming in from Pooja Shah, and she wants to know your thoughts on Kajaria Ceramics. Now, this stock, if you look at the monthly charts, the 6-month chart, a YTD chart, it has given double-digit gains all across. Do you think it's time to buy this one and keep for the long term?
Definitely, yes. It has displayed a very strong consolidation here for the last 6 quarters. If you look at the weekly or the monthly scale, there's a good, triangular pattern formation, which is exhibiting a price target somewhere close to around 1630. So the reward to risk is also very healthy. Even on a pullback towards 1200, 1180, I think it will be a good idea to accumulate this particular stock in one's portfolio. The stop loss for the trade should be placed at around 1120 on a closing basis. The intermediate target is placed around 1480, but positionally we see this particular stock scaling towards 1640.
Right, I said that that will be my last query, but I want to squeeze in one last one from Rajasekhar, and it's on Sobha, since it reported its earnings yesterday, and earnings have been fairly strong and realty stocks have been doing fairly well right now. So would you look at a Sobha currently?
Realty stocks are doing well, but if you look at the structure of Shobha, it is completely diverging. In fact, it is still in that low top, low bottom sequence. So I would avoid building any long positions here until unless we have substantial evidence of a reversal here. The level of around 550 has been acting as a supply zone. Twice we have seen breakdowns getting shaped up near this particular level. So even if we see a pullback towards 540 550 levels, I think that will be a good level wherein the stock should be avoided. And in case if you're long, then I would advise booking profits near within that particular range. The trend is still weak, and we may see further consolidation shaping up in this particular quarter.
Well, expect further consolidation shaping up for Sobha. Well, with that, I think we've come to the end of this query segment. But Sacchitanand, what do you have as stock recommendations for viewers this morning?
So two stocks, both on the long side. First is M&M Financials. We have already recommended this stock to our clients as well. The stock on the weekly scale is showing a rising 3 formation. Again, it is a very rare continuation pattern. If you look at the daily scale, it has already exhibited a fresh breakout from a bullish flag formation. If you look at the placement of its ADX, which is already displaying a substantial strength here, we are expecting this particular move to extend towards 315 eventually on a positional basis. From a trading perspective, the target is placed somewhere close to around 296. And that's why we are recommending building longs here with a stop loss at around 283. The other stock which has hit our radar is Escorts. Yesterday we saw it confidently closing its session about 2100 mark. There has been a good strong call writing zone at around 2000 mark. But if you look at the placement of its momentum indicators, we are seeing that sooner or later we may see a strong breakout shaping up here. So chasing momentum is advised here with a stop loss at 2080 for a positional target for around 2170.
All right, M&M Financial and Escorts are the two stock recommendations coming in from Sacchitanand this morning. Well, with that, Sacchitanand, thanks a lot for taking out time and joining in this morning, and of course addressing all of your queries as well. With that, we're completely timed out on this edition of Morning Trade, but don't go anywhere, because coming up next is Opening Bell. Thanks a lot for watching with the entire team that put the show together. Stay tuned and thanks a lot for watching.